Hey, welcome back. Are you ready to move, but you're concerned because your mortgage isn't up for renewal yet and you don't want to pay those hefty penalties to break it? Well, I'm Adam Walker, your friend in the mortgage business, and this is a question that is misunderstood a lot by clients and even sometimes by real estate professionals. But before we get into it, make sure you press that subscribe button, smash the notification bell so you can continue to get all of our great real estate tips as they come out. So, what is porting a mortgage and why should you care? Well, if you're a homeowner who's thinking about moving to a new house, porting your mortgage can save you thousands of dollars in penalties and interest costs. But there is a catch. Not all mortgages are created the same. Your mortgage needs to be a portable mortgage to begin with. So let's break it down. Porting a mortgage means transferring your mortgage from your current home to your new home. This allows you to keep your current interest rate, mortgage balance, and loan term without having to pay any prepayment penalties. Now, there is a difference. We want to talk two different types. There's a straight port and a blended rate increase. But before we get into that, let's start about checking if your mortgage is portable. It's super important because like I said, not all mortgages are created the same. They're not all portable. So make sure you check if your mortgage has this feature. To check this, simply look at your mortgage agreement. It should clearly state whether it is portable or not. If you're not sure, don't hesitate to give me a call. I'll be more than happy to help you out. Now let's get into the two main types of porting. The straight port and the port with a blended rate increase. A straight port is when you move your mortgage from one property to another without changing the mortgage amount, the interest rate. This is perfect if you're downsizing or maybe even moving to a similarly priced property. On the other hand, a port with a blended rate increase is also known as a port and increase, is when you need to borrow additional funds because your new home is more expensive than your current home. In this case, your lender will blend your current mortgage rate with the current market rates for the additional funds that you need. Let's look at an example and make this a little bit more clear. So let's imagine that you have a $300,000 mortgage, right? You have a current interest rate at 3% because you had this from a couple years ago, and you want to buy a new home. And that new home, in the end, you're going to have a $600,000 mortgage. With a port and increase, you're going to keep your original mortgage rate for the first $300,000 that you have, and then you're going to get the current market rate, say 5.5%, for the additional $300,000. Your lender would then take these two rates, blend them together, and make a new interest rate for your entire mortgage. That's the big difference between a straight port and a blended port and increase. Just remember, it's crucial to check if your mortgage is portable in the first place. If you have any questions, feel free to drop them in the comment section below. I'd be more than happy to help. If you are looking to buy and you need help porting your mortgage, give me a call, shoot me a text, or go to my website, adamwalkermortgages.com, and book directly on my calendar. I promise you, my team and my preferred partners will give you the local competitive advantage in today's real estate market.